Life insurance may change, literally, one's life. So it's normal that many questions arise before a decision is made. Fortunately, there's an answer to all of them. George says he doesn't have money for life insurance, and we understand him, but ask George, how much does his and his loved one's peace of mind value? Is he really sure that he doesn't have money to protect his family? Ensuring his and his family's future is worth at least an investment equal to the price of a coffee per day. That's how much life insurance may cost. Thomas, for example, doesn't believe in life insurance. He doesn't see its usefulness, but he understands how important his salary is for the well-being of his loved ones. If Thomas can no longer take care of them, then life insurance becomes the income his family needs to overcome more easily a difficult financial and emotional moment. Life insurance is also a disciplined way of saving if nothing bad happens to Thomas. This means that Thomas puts aside an amount which he can use for the future of his child as an additional pension or to fulfill his dream. John and Anna say they have more urgent expenses, such as a crib, baby pram, and everything else needed for the newborn. We should tell them that without life insurance, all of these urgent expenses could turn into a financial burden or will value nothing if one of them no longer brings money home. A child is not only a joy, but also a long-term responsibility. His future depends on his parents' timely decisions, and that's why it's good for John and Anna to start saving as early as possible. Stefan doesn't like to talk about death, and neither do we. But if Stefan was insured, he could take care of more enjoyable things instead of worrying about what would happen to his family if he were no longer there. He might think about gifts, for example, because life insurance is a gift that Stefan can offer to his family and to himself. His family gets protection, and Stefan enjoys the present, more relaxed, feeling more confident about his future. Alexandra is skeptical about life insurance. She believes she won't get back the invested money. Tell Alexandra that insurance is like a storeroom where jars are kept, and there are two types of storeroom. In the first room, the jars have an expiry date. The family may open them only in case an unforeseen event occurs. They may no longer open the jars after the expiry of the validity period. In the second room, the jars do not expire. The family can use them when they need them most, that is, if an unexpected event arises. The family can also open the jars at the maturity of the contract as a savings solution. Alexandra is the one who chooses. Mary is 25 years old and she thinks she's too young to take out life insurance. We don't want Mary to think of the bad things that might happen to her. But in the future, when she has more responsibilities and her own family, she will certainly want to protect it. If she concludes a life insurance now, when she's young, it's much cheaper. Later on, when her health condition may deteriorate and her income may decrease, then the insurance price increases. Victor is convinced that nothing bad will happen to him. We hope he's right, but we believe that when it comes to protecting his dear ones, not even the lowest risk should be ignored. There will always be things he can't control because they're beyond his power. But even if such an unfortunate event is unlikely to happen, it's good to have a backup plan. This backup plan is called life insurance.